This day, I'm Anthony Lug. Fitch ratings agency has affirmed Jamaica's long-term foreign currency issuer default rating with a continued positive outlook. According to Fitch, Jamaica's commitment to delivering large primary surpluses and maintaining a sound fiscal framework has bolstered its credit rating. Despite weather-related challenges, the government's proactive disaster risk financing policy has contributed to fiscal stability, including a one-time payout from the Caribbean Catastrophe Risk Insurance Facility. As a result, Jamaica is projected to achieve a primary surplus of 5% for this fiscal year. The agency highlighted Jamaica's improving external position, with official international reserves rising by approximately $900 million to $5.6 billion by the end of 2024. Additionally, the country's debt-to-GDP ratio remains on a downward trajectory, positioning Jamaica to meet its target of 60% or lower by the 2027-28 financial year. Finance Minister Favour Williams said despite adverse weather-related shocks, the government remains steadfast in achieving the 60% debt-to-GDP target, which serves as the primary anchor for its fiscal policy. To some currency trading now, banks and cambios are selling the American dollar for an average $158.06. The Canadian dollar is being sold for $112.39. $199.11 is the average value of the pound, while the euro is going for $164.83. The JSE index declined by 215 points, while the junior market index declined by 21 points. The winners included General Accident, 138 Student Living Variable Preference Shares, Jetcon Corporation, Cygnus Credit Investments 8.5% preference shares, and Lasco Financial. The losers were led by Caribbean Assurance Brokers, Edufocal, Pulse Investments, JMMB 7.15% preference shares, and Caribbean Cream. 14 stocks traded firm. And that's the business day. I'm Anthony Lug. News from overseas after the break.